Hi guys, how are you? Welcome back. Let's do another video, and this is going to be, I guess, part four, because I've been struggling with this trade for a while now, and we're just gonna go back in history, and we're gonna kind of go over things. All right, so this is the Nasdaq, and we're going back to the 17th of November. So we had a corrective move, one, two, three, four, five, broke apart. This is not really a five, but you get the point. It's a one, two, three. But and it's a one, two, three because what happened here? Let me show you. Here there was a range expansion. Okay, and this is what I talk about. And a lot of times, if I'm not giving you the answer that you're looking for, keep asking because what's natural to me uh, may not be natural to you. So to me, I'm like, oh, what? You don't see it? You know what I'm saying? Because I'm just so used to doing this. So again, you have to ask the question. So we had the one, two, three, came up, broke out, failed, and then did what? Failed again, much deeper. All right. So then once it starts to hook over, and hook is a significant amount of move that looks like it's going to continue. Um, so you can definitely say that this is a hook, right? It's a thrust down, correction, thrust down. So at that point, you can redraw, and this is an expansion of the structure. All right. Now moving forward, this is the part that kind of got everybody off guard. This is in Christmas, December time, where it just really just collapsed. Right? It just went way the fuck out of control. And I said, okay, this is the time to buy, and I gave the reason, which was the structure here. Anyway, I won't get into that. So we had this big expansion, and then we got the correction. So we got a one, two, three, okay, four, but again, we don't count five. Fives are rare, okay. And what happened? It comes all the way up and then fails, right? So I put this up, and I said, look, there's a weakness here. Now, obviously, we could not see this part here, right? So there was a weakness. Now, it's got two choices. It can go sideways, or it can start to fall apart again. It chose to go sideways. That's fine. Okay, so then we got the correction. Here it is. One, two, three. Right. Here's the correction. The pause. We sense the weakness here. Even had a little fake breakout, but again, crossing the line in of itself is not a whole big deal. You need to see follow through. So we got the correction, and what happened after the correction? After the three, it reversed and took off. Right. Up it went. So then it continued on higher. We were looking for this correction. This should have been much deeper. That's because, let me fix this, because it had this rising wedge. So once it broke, we were looking for that deeper pullback. It was very short lived, and instead, what did it do? Turned around and took off. Fine, that's another range expansion. Right now, you have 2 points. You see the range expansion. Then what happened? Well, it went incredibly bullish. So all these people that were trapped in here, uh, short, they were squeezed out, and now we can make an argument that they are being squeezed up here. All right. Now it went into a very nice tight, 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 and this is where I started to say, hey, this is coming up against the resistance area here. Look for a correction. Instead, what it did, it just continued on and went incredibly bullish. Now, when you have a structure that is moving tight, 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 comes down and then spikes right in your face and continues tight, 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 tight. What is it telling you? It's telling you there's a certain urgency to buy something, right? Now, when you have that kind of urgency, usually they're wrong, and that's why I say when it goes incredibly bullish, it's actually bearish because those guys are going to get trapped next, right? Remember, the market is there to apply the maximum amount of pain to the maximum amount of people, the maximum amount of times. So we got this structure. And I said, all right, this is the um, this is the Fed day. It's been riding it right up against this trend line, so we should get a correction. We should get something like this and then a drop. Okay, that would make sense if it came all the way down here, because that would be the second or third touch, right? And then perhaps bounce from there. It didn't do that. Didn't do it. So now look at the way it has set up. We got the Fed day, we got the big spike, and then it failed. One, two, three, failed. All right. Then we got the breakout the following day. Now you're sitting there looking at it, and you're like, okay, this should reverse, right? It needs to correct. Didn't do that. Instead, it just squeezed the fuck out of everybody, right? So then now you're going incredibly bullish on the incredibly bullish. What do I mean by that? Well, this is incredibly bullish, right? Because it's breaking out of the structure. And then it goes even more incredibly bullish out of this structure, this one right here. Okay, that is an urgency to buy. It's a fuckery move. It's not something that's, I don't want to say legitimate because the market is always right, but it people are chasing. It's not the way it's supposed to work. So then I'm like, okay, so now what? What do we do, guys? Is it going to have an urgency to go all the way to the top? What's the deal, right? And this is what I mean by going all the way to the top, right up here, all right? Now, now in a sideways market, and that's what we identified all the way back here, right? In a sideways market, what's going to do? It's going to go sideways, right? It's going to be going sideways. So you identify the 2 points that are the lowest, which is this one, came down, broke this one. It can come up, break this one at some point, and then reverse back down. Okay, that's the possibility. Um, it would actually be a lot. Oops, sorry about that. It would actually be a lot more bullish if it would have done something like this, where it comes down, comes up, doesn't quite make it to the top, comes down again, creates this pattern, and then off it goes. Because this breakout is going to be legit. Now what we're getting is that sideways kind of move, right? So we're still in a sideways market, which means that more likely than not, the top is not going to break and continue on higher. Okay, that doesn't mean it can't do it. It's just not likely. And that's what we do, right? We assess and go with the more likely scenario. So when you're getting near the end of a move, and we are assuming that the previous high is near the end of the move, and you're starting to see this kind of, you know, panic buying, I guess you want to call it, whatever you want to call it, this urgency to buy, what you'll end up seeing usually is that's usually the end. Where's my other line? I hate when it does this. Anyway, that's usually towards the end of the move because everybody's bullish, right? So I guess I have to redraw it back in here. Anyway, here it is. So you get that urgency of buying, and you can see it in the channel how it hugs it, comes down, and then boom, squeezes everybody else, and then you get too euphoric. Well, this is what I was saying to Maurice yesterday, that when you start getting too euphoric, that's when nobody's looking, that's when you want to be shorting, right? And that's why I thought this Fed day would have been a very nice day to go out and start shorting. Now, again, uh, this is fuckery. This doesn't make sense. You don't get a breakout of a breakout, right? Incredibly bullish to incredibly bullish. That's actually bearish. Everybody's panic buying. So eventually they're going to sell. Now, if you start to short, let's take this example. If you start to short here, right, and you say, oh, okay, finally it broke down this rising wedge. It's fun. Okay, let's short. And then you're like, I'm going to take it down here. And it does this, you're fucked. You are absolutely fucked. It is far, far better to short Even now, I look like an idiot, but doesn't matter. You're far better off shorting when everybody else is bullish. Okay, that you might get that pop, and you'll be, in pain for a while, but eventually you're gonna get that move, and then you don't have to do anything. Right? You can just sit back and relax. If, on the other hand, you start shorting down here somewhere, and then it turns around right back in your face, you're fucked. You are fucked. You're shorting at the wrong times, and you're buying, or conversely, you're buying at the wrong times. So yesterday I took the shorts. Right now I could have stopped out here, right down here, because it did what I wanted it to do. Uh, and I was like, okay, this is gonna break. At some point, it's gonna break. So I kept it on, and instead, I got my ass handed to me. So okay, fine. The first place you wanna take a short is the previous high, right? That's a legitimate place where you would see a reversal. That didn't happen. That's when I was pointing that this would be ideal to leave a gap right up here, short at the previous high, and then watch it reverse back down. Didn't happen. Fine. The next place you want to take a short is here, right? And I said, all right, it's right up against resistance. The next little point to short here, it'll come back down. You will have, sorry, let me do this again. You will have one here, you will have one here, comes back down. Even if it just corrects a little bit, you can take this one off, see if it comes back up, take a little bit of pain. You can start building a position, basically, is what I'm trying to say, right? And you can trade around the position. That didn't happen. It actually just fucking took off. I'm like, all right, this is bullshit. So then shorted again for the third time. And let's just kind of analyze this move. And I know this video is a little bit longer than usual, but I think it's important. So let's analyze this move now. So you got the thrust up, and then it goes into an F flag, right? I've said this many times. And then we got the pause, and then it took off again, and then we got another pause, and then you see it doesn't quite make it to the top. It's the same thing that I was showing you previously. It indicates weakness. So then we started going sideways, and then we ended up with a sideways falling bullish flag, all right? And remember that you start the counts from the highest high, right? So this is a one, two, three. It comes down and breaks. Okay, this breaks, and then it builds a consolidation. And then what happens? This is the compass now, right? Going down, and then you get the consolidation, and then that's a bear flag, right? Structure below structure, as we always say. So what you're looking for, if this is a compass, you're looking for this to break down. Well, before making the video, it was actually up here. So what happened? It broke down now. Now we're back into structure again. See, this is the problem, that we're inside of this structure. So this starts to fail, then the likelihood is if it breaks the top, it's going to break the bottom. So from this little stupid flag, what you're getting is a break that's probably going to lead into this break. And here's the other catcher. That if it breaks that, you have that longer term trend line that breaks. And then guess what? Now you're starting to look for even a bigger drop in the market, right? Because now, right, you broke this, you're going to break this, but then you're back at the structure on this one, and then guess what? If you're going to break the top here, you're going to break the bottom here. See how that works? So that's why I said it was worth taking that short uh, in on Fed Day. I don't trade news, right? I was trading the structure. Now it went against me. I got my ass handed to me. That's fine. Not the issue. The issue is I ended up over leveraging because this really was a fuckery move. This is There was nothing in the market that should have produced something like this. So that's why yesterday I was saying, this is one of these rare times where a small little structure is going to make a big difference, right? And I was talking about something down here because it started to consolidate down here, right? It's going to make a big difference. That once it breaks, it's going to have a more meaningful impact. Well, it turns out that first I had to apply more pain to everybody, including me. Um, and try to short squeeze everybody. And now this little move here becomes more meaningful because you're going to break this structure here, then you're going to break this structure, then you're going to break this structure down here, and then guess what? Before you know it, you have a hero call. Hero call meaning a very big trade that's working out for you. So that's the anatomy of some charting. This comes with experience. You kind of know what you're looking at, what you're looking for. Then you manage it when it goes against you, because you're seeing it obviously before everybody else is seeing it, and you know why you're doing it. It's never a surprise. So remember, if you're ever in a position where you don't know what the hell is going on, just stop out automatically. Believe me, if there was a point that I would be like, okay, I don't know what the fuck this thing is doing, I'm out. That's it. That's simple. Now, the question for me was not that I didn't know what it was doing, it's just, is it going to come all the way to the top? Right? Well, if it does that, great. It doesn't bother me, except for the fact that I'm over leveraged. So now I'm fucked. Right? So then you have to come up with a strategy, and the strategy was to um, reduce the exposure as it goes higher. Now, I'm going to show you something. There was a YouTube video, some guy was speaking, made a great point. Um, and this is what you guys, this is the level you guys need to get at. Okay, I'm going to tell you the story the way he told it. So I go into a crowd of 200 people, and I whip out a $100 bill, and I say, look, here's the deal. You all get to auction on this $100 bill. The value is 100. It's printed. Everybody can see it. You can all bid for it, okay? And the only rule is that whoever had the second bid has to pay whatever that amount he last bid. That's it. That's the only rule. So he goes out with the $100 and people started, $1, $2, $5, 10, 20, 40, 60, whatever. Eventually, there was um, two people, and the one person was 90 and the other person was 100. Now, when these people started to bid on this, they wanted to make $100, right? Well, a little bit less, but they wanted to win $100. Now they're in the position where the number two guy is saying, "Fuck it, I'm not paying $90. I'd rather pay more just to get the victory." So he bids 110. Now the guy that was uh, at 100 says, "Same thing. Fuck it, I'm not paying, you know, 100 dollars. So I'm going to bid 120." And then the other guy says 130, 140. You see, the initial where you started from was greed. Where you're ended up now is kind of, you know, victory, right? Ego. Now at some point the bidding goes high enough where maybe one of the guys doesn't have enough money. So he just keeps bidding so he doesn't get embarrassed, right? And then the next guy might be in the same situation. So they keep bidding up 300, 400, 500, 600 on something that's very clearly printed. It's very everybody knows it's $100. They cannot make more than 100, and yet they keep going. Okay, so where they started from and where they ended up is a very very big difference. So it's important to realize and understand who you are, how you think, how you react to things. You went from greed to sunk cost, right? Sunk cost means you're in for a penny, in for a pound, whatever. Okay, I'm just gonna, it kind of drags you in. Then you get emotional, then you get egotistical, and then you go into fear, and then and this goes on over and over and over and over and over again, not only in trading but in life, right? And when you get into the trading aspect of it, especially when you're shorting when everybody else is buying, you gotta have balls the size of Jupiter, and you better know what the fuck you're doing at all times. Because if you don't, all those emotions are going to take over, and then you're going to end up making the wrong decision at the wrong time, and you'll never be successful. Okay, so learn who you are, what you're doing, why you're doing it, And if ever you get stuck and you don't know what the fuck is going on, stop out. Nothing wrong with that. Go back, reassess. And that's why I keep telling you guys, keep practicing, keep practicing, keep practicing. It's like anything else. You do it long enough, you're going to have foresight, you're going to start projecting as to what might happen, right? And you're going to be adjusting accordingly. And that's how it is between a senior captain and a new first officer. A senior captain's seen it 1,000 times. He's less likely to panic and get tunnel vision and stressed out than the first officer is. So because they're able to project, they know certain things work, and a lot of times it's do nothing until you have enough facts to make a good decision. Otherwise, you're just reacting to shit, right? So while the first officer is freaking out, the captain's kind of cool, chilled, relaxed, and says, "All right, we're gonna do this. We're gonna do this. We're gonna do this," because he's thinking. So that's what we all need to do. We need to think about when we're doing these things, and if it doesn't go our way, that's fine. Not a problem. All right. So that's it for this video. A little longer than I wanted to, but I think we covered a lot of really good things. And I hope you refer to this video in the future. It will keep you, you know, balanced. Take care, guys. Talk to you later. Bye bye.